Hey everyone, good Wednesday morning. It is about 10 o'clock. Wanted to give you a midday look at what's going on in the markets with the volatility that we're seeing. You know, we've been looking for a rally to sell and been looking for an opportunity to sell these markets even harder. And we had that yesterday, but this morning we're getting a lot of strength, and that's really coming in part from the wheat and corn markets. So here's what Kansas City wheat looks like. Obviously, this market just got absolutely pummeled over the last 12 days, and today we're having quite a bit of strength. And what I think is really interesting about it is that if, and big if with a question mark, uh, Kansas City is able to close back up above 780 on the July contract, that may set the stage for a bear trap that leaves all of these shorts buried. And with the amount of shorts that are happening or that are in the marketplace, and the lack of available farmer ownership to sell based on the crop size, this could get really interesting. So let's think about this for a minute, right? Just drive around Kansas, and you won't find much, if any, decent wheat. And everybody we talk to, you know, it's all about the insurance number, and the insurance number is clear up here at these highs. Okay, so anything below here, you're into insurance territories. And we have this situation where the farmer doesn't have available cash grain to sell. We're already below insurance levels, and the funds have pressed to a massive short position in this market, and the elevators don't have a lot of ownership of old wheat anyway, because they've been selling it because the prices are high. So your natural seller in the market is not available to provide liquidity to funds that want to exit, and that's the point. That's why we're seeing some exuberance out of here, um, and we really could get excited moving forward. Now, fundamentally, I don't know what else has changed other than, hey, it's dry and we don't have a lot of bushels to sell. But that recipe that's sitting there with the farm ownership versus fund ownership really could provide a catalyst. And so I wouldn't be surprised to see wheat go ahead and accelerate higher and start to put pressure on everybody that sold into this region, right? And if for some reason we were able to get back above 8 at some point, then you could really see wheat get excited and potentially show that this whole move down here is a false breakout out of this range. And if you have a false breakout, then what would follow is potentially a move higher to higher levels. So stay tuned on wheat. A day is not a trend, and I'm not trying to get everyone bulled up. But if you're wondering, if you check your quote screens, why is wheat up 37 cents here this morning? That's why. You've got a very potent recipe for a rally sitting there, and we'll just have to see if it really ignites or not. Now let's look at what that's doing to corn too, right? Corn is following wheat at the moment. Now remember the backdrop on corn, right? You've got tight nearby fundamentals, and you've got a balance sheet on new crop that's likely to double with 92 million acres and a yield of 181. So you've got massive new crop supply and tight old crop supply, and so the funds over the last several days have been just saying, "Hey, no problem in the grain complex. Plenty of supply coming. Sell the hell out of it. We don't need to do anything else." And so yesterday you had this big outside day down, and now today we're following it up with a large hook reversal, long lower shadow, overlapping this shadow that was a hook reversal. And if corn is able miraculously, and again, big if, right? Because nothing's changed fundamentally, but if corn is able to close above 587 or 590, then it leaves a massive outside day, quadruple close, key reversal at the bottom of a very oversold market. Let me put that in context. So your RSI is down here. Right now we're trading at 27.50. We just came off of 19 with a small bullish divergence here and a small bullish divergence back here. And our stochastics are starting to cross with a bullish divergence on the short term plus on the longer term. Our force index did not diverge. In fact, it accelerated lower, which is not bullish, but we are starting to see it tweak up. And again, nothing's perfect here. These don't all have to perfectly line up. But the point is that you do have the recipe technically here for a rally. And as much as that doesn't make sense to us given the fundamentals, we've talked about this over the last several weeks. Markets don't go in straight lines, and they can rally without a reason. But if wheat is going to keep pressing higher, corn may go with it, because remember, they're cousins. And then that spills over into buying in the bean market, right? Again, beans, we have this 13. We had this nice rally. Then yesterday, it just got pummeled with this big old outside day down with a 1, 2, double close, massive outside day, a key reversal. And now today we're finding a little bit of buying into a small divergence on the RSI, and on old crop it's even a little bit more pronounced. Let me put some of that in here. Here's the old crop, same sweeping reversals yesterday, and now this morning we've pressed below 14, but we're not able to hold it, and we're not able to hold these lows. And so that's just kind of reinforcing a little bit of buying across the board. Now from a stochastic standpoint, beans are oversold. From an RSI standpoint, we're not really oversold. In fact, nothing really shocking about this. So neutral. Force index, again, small divergence from the previous low, but not oversold. Nothing to really jump up and down about. So beans would be the weakest in the complex, but starting to show a little bit of strength here. So if this close is able to get taken back, and beans are able to forge a reversal after that sweeping day yesterday, that's worthy of at least a golf clap, and something that we should pay attention to. So lots happening here so far. Again, it's only 10 o'clock, so there's lots of trading left, and I wouldn't recommend anybody take action yet, but if we do come in with hedge lifting recommendations, you'll at least know why, because these things are showing a little bit of strength, and that's catching people a little bit off guard. Last market I want to show you is new crop corn. I apologize to be jumping around here, but new crop corn having a nice reversal day. For it to be really compelling and really give us a kind of the beginning of a tradable low in here, I'd like it to close back above yesterday's high at 530, and because that would take out 1, 2, 3 prior closes and a prior high. So those would all be nice things to see happen in order to show a more of a tradable low in place, and it would be similar to what we had back in here that ignited that little rally that gave us a selling opportunity. So again, nothing's changed fundamentally, but markets don't go in straight lines, and this might be the bounce that we've been hoping to get some more hedges on in place. So have a great day. We'll talk to you later. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition, and there is a substantial risk of loss anytime you trade. We'll talk to you later. Have a great day.